Are you still living paycheck to paycheck, drowning in debts, and stuck in a financial rut? Do you want to make your way to building a significant fortune? In a world where the value of money never stays the same and inflation can eat into your savings like a silent thief, it is not just about saving money anymore. It is about growing, multiplying, and making it work for you. But with so many options, how do you know where to find those golden opportunities? That is exactly why we made this video for you today. Welcome to Affluent Empire. Today, we will discuss the 10 best assets you can invest in. Trust me, you will want to take advantage of the surprising assets that could be your ticket to wealth. Number 1. Real estate rental properties. One asset class stands out when we talk about building wealth. It is an age-old powerhouse of wealth creation: real estate. Yes, you heard it right. Rental properties are a strategic game of growing your wealth. You see, real estate investing is a proven path to riches. Many of the world's multimillionaires carved their paths to wealth through bricks and mortar. And it was not by chance. Real estate is about the immediate cash flow and the long-term game of appreciation and leverage. House flipping is a clear example. Buy a property below market value, upgrade it, and sell it for a profit. It's straightforward. Purchase low, rehab smart, and sell high. This approach is a numbers game that can lead to significant profits. Owning multifamily properties is another path to wealth in real estate. These properties generate steady monthly cash flow to grow your portfolio. Reinvesting this cash flow can exponentially increase your real estate holdings. Real estate is unique. It's a tangible asset that generates cash through rent and appreciates in value over time. It's like having a golden goose that lays 2 types of golden eggs, and as our world's population grows, so does the demand for housing, making real estate an evergreen asset. Here's where it gets interesting. Leveraging debt in real estate can amplify your wealth. Put down a fraction of the property's price and let the rent from tenants cover the mortgage. This strategy builds your equity while the property's value grows, increasing your net worth. Whether residential, commercial, or even farmland, each type of real estate offers unique opportunities to generate wealth. It is an asset that has made many people wealthy and continues to do so. While real estate investments are not without their challenges, the features of income generation, appreciation, and tax benefits can make it a cornerstone of your wealth-building strategy. With real estate investments averaging returns of 6.87% annually over the last decade, it is clear why this asset class is a favorite among investors. The initial investment may be higher, but the rewards, including passive income and equity growth, are substantial. So, whether you are flipping houses, renting out multifamily units, or leveraging equity for your next big purchase, real estate offers a concrete path to building wealth. Number 2. Real estate investment trusts, REITs. If you are intrigued by the potential of real estate, but hesitant about the management and logistics of owning properties, there is an alternative route: REITs, or real estate investment trusts. A REIT operates much like a stock. It offers a share in a portfolio of real estate assets. When you invest in a REIT, you buy into a company that owns and operates real estate. REIT helps you reap the benefits of property ownership without the direct responsibilities. These trusts collect rent and distribute profits to shareholders as dividends, providing a steady income stream. You can buy REITs and sell on major exchanges like the New York Stock Exchange or NASDAQ, simplifying investing in high-value real estate. From towering office buildings to sprawling resorts, REITs open the door to diversified commercial properties with less risk and upfront cost. It's important to note the distinction between publicly traded and non-traded REITs. While traded REITs offer liquidity and transparency akin to stocks, non-traded REITs, although registered with the SEC, lack a public market. This can affect transparency and valuation, potentially raising the risk. The pros of REITs include SEC registration, which offers a more accessible and less risky path into commercial real estate. However, non-traded REITs might carry higher risks due to their lack of transparency. Dividends from REITs are taxed as regular income, which is a consideration for investors. With average annual returns of 11 2%, REITs have outperformed many individual real estate investments. Though performance can vary, REITs present an attractive option if you want to enter the commercial real estate market without the complexities of direct property ownership. REITs are a compelling addition to any investment portfolio. If you aim to diversify your holdings and tap into the lucrative world of commercial real estate, exploring REITs could be your next smart move. Number 3, stock market. Let's tackle the giant everyone is curious about, the stock market. It is where fortunes are made, not overnight, but through strategic, long-term investments. The stock market offers a potent mix of capital growth and compounding gains. Investing in stocks is not reserved for the elite. It is accessible to everyone, offering a path to wealth that hinges on patience, diversification, and the right strategy. Whether you are starting with a small amount or ready to invest big, the stock market is where life-changing wealth is generated. Diversification is your best defense against the market's volatility. A well-rounded portfolio spreads out risk and can deliver handsome returns over the years. It is about playing the long game, where consistency and strategy turn small investments into substantial fortunes. For many, the entry point into the stock market is through an S&P 500 index fund. This fund holds shares in 500 of the largest U.S. companies. This single investment instantly diversifies your portfolio across various industries, from tech giants to consumer staples. Even Warren Buffett champions the S&P 500 Index Fund for its reliability and potential. It is a strategy so robust that Buffett bet $1 million on its success against actively managed funds, and won. With an average annual return of around 10%, it is clear why this is a favorite approach for building wealth. Time is your best friend in the stock market. The earlier you start, the less you need to invest monthly to achieve your financial goals. While day trading might seem like a shortcut to wealth, it is a high-risk path that often leads to loss. Instead, focusing on long-term gains through strategies like buy and hold can pave the way to success without the constant market watch. The stock market is not a get-rich-quick playground, but a field where informed, patient investors thrive. Whether through index funds or a diversified portfolio of individual stocks, start your journey in the stock market and you are setting up for potential life-changing wealth. Number 4, digital assets. Digital assets are transforming the landscape of income generation and reshaping our understanding of assets and income. Digital assets like ebooks, courses, YouTube channels, websites, software, tools, and more are a modern gold rush. They are opportunities to create something once and sell it repeatedly, generating income while you sleep. Unlike traditional assets, digital ones require creativity and insight into the digital marketplace. The journey into digital assets starts with a personal story, a turning point that drives us toward financial independence. Digital assets are a powerful solution, allowing creators to build wealth in ways that were unimaginable just a few decades ago. What is important is to understand what indeed constitutes an asset. Digital assets range from simple PDF guides sold online to comprehensive online courses and membership communities. These assets can become your ticket to passive income. But the difficult part is attracting people to buy them. Attracting attention to digital products involves creating compelling content that resonates with potential customers. Social media platforms like LinkedIn, Twitter, Instagram, and YouTube are fertile ground for building an audience. You do not need an audience of millions. A small, engaged audience can fuel a successful digital asset business. The process of building digital assets is iterative. Building digital assets means moving from passive consumer to active creator, from zero to hero in the digital economy. Initial efforts might yield better results, but persistence and refinement lead to success. Publicly sharing the journey of creation builds your profile and connects with others on a similar path. Digital assets carry their own risks, including platform dependency and copyright issues. Diversifying across multiple platforms and exploring new technologies like Web3 are strategic moves for safeguarding and expanding your digital portfolio. Digital assets buy you more time, which can be invested in further financial assets or enjoyed with loved ones. In a world where the traditional job market offers no guarantees, digital assets present an avenue to take control of your financial future. Number 5, cryptocurrencies. cryptocurrencies have become synonymous with wealth creation in the digital age. Take the example of a Norwegian student who invested just over $26 in Bitcoin in 2009, only to find his holdings worth millions years later. Such stories have inspired countless individuals to explore the crypto market, each hoping for a similar windfall. The landscape of cryptocurrency has evolved dramatically since Bitcoin's inception in 2009. Early adopters witnessed their investments skyrocket, but today's market vastly differs. With broader acceptance and institutional involvement, the explosive growth seen by early investors is less likely for newcomers. Despite this, the potential for profit remains, albeit with a nuanced understanding of the market's current dynamics. Cryptocurrencies are still volatile, with high risk but potentially high reward investments. Unlike traditional assets like stocks or real estate, crypto can fluctuate wildly, offering opportunities for long-term investment and short-term trading strategies. This volatility delivers significant gains and posing substantial risks. Understanding this balance is critical to navigating the crypto market successfully. So how does one approach crypto to build wealth? Long-term holdings, swing trading, and day trading are the primary methods investors use, each with its strategies and risks. The core of successful crypto investing lies in recognizing these styles and applying them judiciously. Beyond investment, crypto and blockchain technology offer utility, saving time and money on transactions and providing alternatives to traditional financial systems. However, the crypto space is not without its pitfalls. Scams and frauds are rampant, with countless investors lured by the promise of quick riches, only to find themselves holding worthless digital coins. It is a stark reminder that due diligence and skepticism are invaluable. Demographics play a significant role in crypto investment patterns. Millennials and Gen Z are more inclined towards digital wallets and cryptocurrencies. They view cryptocurrencies as a lever to uplift their financial status in a challenging economy. With baby boomers holding the majority of traditional wealth and millennials and Gen Z looking to digital assets to build and diversify their portfolios, the landscape of wealth and investment is shifting. As $68 trillion shifts from baby boomers to millennials by 2030, the integration of digital and traditional assets will redefine wealth and asset management. Understanding the crypto market is fundamental to successful investing. Market knowledge, diversified portfolios, and a clear investment strategy are essential. Investors must navigate the market with insight and caution, whether opting for long-term growth or short-term gains. Non-fungible tokens. NFTs, or non-fungible tokens, represent a revolutionary way to own unique digital assets, from art to music and even tweets. The NFT market exploded in 2021, reaching over $40 billion in total value. This surge reflects a new frontier in digital ownership and investment. Success in the NFT space requires understanding blockchain technology, the crypto market, and, ideally, the arts. You need to identify promising projects early on, like Bored Ape, Doodles, and Azuki, and invest before their value skyrockets. NFTs derive value from their ability to be traded, displayed, and exchanged. This creates a dynamic ecosystem where all participants can potentially profit, starkly contrasting traditional markets, where only a select few reap the rewards of speculation. Despite the profit potential, the NFT market remains a niche fraught with risk. The majority do not see significant returns on their investments, and the market's lack of regulation adds to the uncertainty. Success stories are the exception, not the rule. There are several ways to engage with NFTs profitably. Creators can mint and sell their work as NFTs on platforms like OpenSea and Rarible. Investors might buy into collections, anticipate value growth, or trade NFTs based on market trends. Additionally, renting NFTs or earning royalties offers avenues for recurring income. While NFTs offer unique opportunities for wealth generation, they are not a guaranteed path to riches. The market is driven by popularity, speculation, and the inherent value of the digital asset. As with any investment, due diligence and a cautious approach are essential. Number 7, franchising. Franchising can be lucrative when you select the right brand and manage it effectively. By leveraging an established brand's name and support, franchisees can build multi-million-dollar businesses. The franchising model benefits from higher success rates than independent startups, thanks to proven business models and brand recognition. However, entering the franchising world requires a clear understanding of the industry. While franchising has significantly contributed to the economy and boasts a high profitability rate among franchisees, it is essential to approach with realistic expectations. The allure of becoming rich through franchising must be balanced with the understanding that success depends on many factors, including the industry chosen and the effort put into the franchise. The average pre-tax income for franchises can vary widely by industry, from as low as $38,471 in travel and recreation to $106,000 in the automotive sector. This variance underscores the importance of careful selection and management of the franchise. Number 8. Online businesses. E-commerce has revolutionized how we interact with the marketplace, making products from across the globe accessible with just a click. But the question on many minds is, can this digital marketplace make you rich? The journey of Jeff Bezos with Amazon illustrates that e-commerce can indeed pave the way to riches. However, their successes were not overnight phenomena, but the culmination of strategic planning, relentless work, and adaptability. E-commerce is no shortcut to wealth. It demands dedication, a deep market understanding, and a compelling product or service. Success stories are built on hard work and a relentless pursuit of innovation and customer satisfaction. Running an online store is powerful, yet entering this competitive arena requires more than just an attractive website. Finding a niche, understanding your audience, and delivering value are crucial to standing out in a crowded digital landscape. To thrive in e-commerce, expect to invest money, time, and effort. Each step requires attention to detail and a proactive approach, from sourcing products to marketing your brand. And while automation can streamline operations, personal involvement is indispensable, especially in the early stages. Promoting your business effectively through social media, targeted advertising, and SEO strategies can enhance your visibility and drive traffic to your site. Staying informed and adaptable to market trends and consumer behavior is essential for sustained growth. While the path to wealth through e-commerce is challenging, it remains a viable avenue for those willing to do the work. Number 9. Angel investing. Angel investing presents a unique opportunity to back early-stage startups with the potential for substantial returns. Unlike traditional stocks, crypto, or real estate investments, where profits are clear upon sale, angel investing operates on a different paradigm. Angel investors inject their own capital into promising startups in exchange for equity. Their goal is to see the startup succeed and their stake increase in value, leading to substantial returns upon an exit through acquisition, merger, IPO, or other means. Yet, the path to such success is fraught with risk, as many startups do not make it off the ground. The process begins with selecting promising startups from many options, investing anywhere from $5,000 to $150,000 for an equity stake, usually around 20%. The real challenge is that angel investors bet on the startup's success with limited data, locking their funds away with no immediate liquidity. In the US alone, over 756,000 angel investors contribute to a vibrant ecosystem, fostering innovation and entrepreneurship. Despite the high risks, the allure of angel investing lies in the potential to be part of the next big success story, much like the early backers of Uber saw their investments skyrocket. Angel investing requires a deep understanding of the market, a knack for identifying potential, and the resilience to weather the ups and downs of the startup world. For those willing to embrace the challenge, the rewards can be transformative, not just in terms of financial returns, but also in the satisfaction of helping shape the future of business. Number 10. Precious metals. In an era of fluctuating stock markets and economic uncertainty, savvy investors increasingly turn to precious metals like gold and silver to safeguard and grow their wealth. With investments in gold reaching an 11-year high, it is clear that the appeal of these metals extends beyond their physical beauty. A decade ago, an ounce of gold was valued at around $1,325. Today, that same ounce is worth approximately $2,000. Silver, too, has shown resilience and growth. Precious metals are a hedge against inflation and a potential source of long-term gains. Gold and silver are time-tested protectors of wealth. For instance, 10 ounces of gold purchased 23 years ago would have significantly outperformed inflation, showcasing the metal's ability to preserve purchasing power over time. The benefits of investing in precious metals include a hedge against inflation, as their value often remains stable or increases when the purchasing power of currency declines. Moreover, diversifying your portfolio with gold and silver can reduce volatility, providing a safety net amidst market fluctuations. Another compelling aspect of precious metals is their tangibility. Unlike digital assets or paper securities, gold and silver are physical assets you can hold, store, and quickly liquidate. This tangible quality adds a layer of protection for many investors in times of economic distress. If you could add one more segment to this list, what topic would you choose and why? If you find value in our content, please show your support. Like this video, subscribe, and get notified. Thank you for watching, and don't forget to watch part 2 of Wealth Building Assets. We look forward to bringing you more valuable content in the future.